Hello traders! I hope you watched the first part of the video where I explain what a proper rollback is and how to determine it. And of course, they liked it? Well, if you haven't seen it yet, a hint will appear in the upper right corner. I recommend that you definitely watch it, as this is one of the components of the basis for determining the structure of price movement. Well, we continue to study the structure of the market. We need the structure in order to correctly determine the direction of the price and not fall for the manipulations of large players. I hope it is no secret to you that all banks, financial institutions, and large investors do not use minute time frames in their trading. They analyze weekly and daily time frames and enter the market on hourly charts. Therefore, analysis should be started at least from the daily chart. Minute time frames are needed only by the market maker to fill out orders in the order book. Well, we retail traders are trying to actively use them in our trading. Give me a minute and I'll try to explain to you something complicated but very important. If you think that the market maker is a big player or something even worse, hunting for your stop losses, then you are mistaken. A market maker is simply an intermediary between us and the banks, who undertakes to open our transaction at the price that we indicated in the application when we buy or sell an asset. This is spelled out in the market maker agreement, which you can ask your broker for, and he will provide it to you. Simply put, when you want to buy, say, euros at a certain price, but at this price there is no seller who is ready to sell them to you, then the market maker acts as a seller. And until a seller appears there who will not cover this market maker's transaction, the market maker will bear losses. This is how areas of imbalance or inefficiency appear, to which the price subsequently tends. There is no super secret here. Well, at least you now know the nature of the imbalance formation. I will talk about the types of imbalance and its significance in my separate video. So, smartness question. Why do we need to understand the construction of a correct rollback? I'll give you 5 seconds to think about it. Time has passed. Right. To determine where inducement is located. With its breaking, we can determine the end of the impulse wave. If you couldn't answer my question correctly, then don't be upset. You have everything ahead of you. Know that I'm just sure that you will succeed. Definition of BOS and CHoCH. Breakout of the high or low with the body of the candle being secured is called BOS. BOS is confirmed only after the candle breaks through and fixes the level, above the level, upward movement, or below the level, downward movement. If the candle breaks through and is closed by the shadow of the candle, then this is not a BOS, but only a withdrawal of liquidity. When confirming the BOS, we can mark the high or low of the underlying structure. If the movement that formed the BOS does not have a correct rollback, then the marked high or low is secondary. After the correct rollback is interrupted in the movement that formed the BOS, we can mark this wave as completed. At first glance, this sounds very difficult, but believe me, I thought so myself until I took notes on everything and started training. Once you spend a couple of hours at the terminal and mark several currency instruments, you will simply continue marking everything fully automatically. A small cheat sheet for fixing the BOS theme with visual examples of fixing candles with the body and removing liquidity from the level. According to YouTube statistics, 92% of viewers watch my videos without subscribing to the channel. Therefore, I have a huge request to you to subscribe to my Pipsley Trade channel. Your subscription and activity in the form of likes and comments encourages me to create more useful content for you. CHoCH is a change in the nature of the market. As a rule, after the formation of CHoCH, the movement changes its direction, but it is not always the case. We need to consider several facts, since all time frames are, in fact, a nesting doll in a matryoshka doll, and therefore it is important for us to choose only 3 working time frames for ourselves. Let's take my example. In my trading, I use a 4-hour time frame as a global movement, a 15-minute time frame as a local movement, and a minute time frame is used to find an entry point into the market. You can take daily, hourly, and 5-minute time frames, or a weekly 4-hour and 15-minute time frame. As you please. It is important to understand here that the higher the time frame ladder, the rarer the trading signals will be, but the less market noise there will be and the more time to make a decision. Each of these models has its own pros and cons. We decided to mark the structure of market movements for a reason. By marking the BOS, we already potentially know the place, upon breaking through which a CHoCH will be formed. There are 2 rules that confirm the formation of a change of character. 1. A candle that breaks through the CHoCH level must close with a body behind the level. 2. If the candle breaks the level with a shadow, then this is simply a collection of liquidity and not the end of the wave. There are no more rules for forming CHoCH. Breaking the structure, like any other pattern, should be formed in places of interest, or, as they are called in the smart money concept, POI zones. Areas of interest are block order, flow order, liquidity withdrawal, imbalance. If we consider the formation of the CHoCH pattern absolutely anywhere, then the stop loss will be significantly larger than it could have been, following the rules and trading from areas of interest. You might ask, why use 3 time frames? It's simple. I mark areas of interest on the 4-hour chart, and if I have a CHoCH formed on the 15-minute time frame, but not in the POI zone, then I consider this breakdown as a trap, or in other words, inducement of the 4-hour chart. Under these conditions, I look for trades to continue the movement. And if the M15 break occurred in the area of interest, then I consider it as true and trade a reversal. Do not think that by watching this video, you will immediately become a profitable trader and be able to see all the structures and reversals. It doesn't work like that. Correct vision of BOS and CHoCH, as well as identification of areas of interest, will come with experience. All that is required of you is to take notes on this information, write down the rules, download and install the strategy tester, and test the construction of the structure and changes in price direction. At one time, I paid quite a small amount for this information, and today I give it to you absolutely free. I don't know how you'll feel about her, but I can say with confidence that these definitions of BOS and CHoCH have strict rules for their definition, and this is precisely what gives an advantage over other strategies. What makes any strategy profitable is its strict rules. You should not have a question at the moment of formation of the pattern. Could it be, or is there really an entry point here? Everything should be written down on your checklist, defining a zone and forming a formation, rules for entering and exiting a trade, and nothing more. I hope you enjoyed this video, and the information in it will help you to conduct profitable trading. Good luck to everyone and more profitable days.